Amazon.com made a high in the 135s. And we're going to be buyers in here about, I would say $2.20 lower than the original high. And basically by having that entry down here as it goes through its range today, is that we would be buying 5 more contracts at $2.50. That gives our cost $2.90. And that puts the call contract right down in this big bar that came up. And we're not owners of the inflated prices, but we are owners down in this range. And that's how we're going to scale it. It's not a, it's a trade that we're comfortable with overnight. Even though that the stock market's closed tomorrow, that unemployment number is going to come out, and it's going to cause another short squeeze, and Amazon will gap higher on Monday of next week. And that means that these contracts will gap up on the open for the trader to take profits. I will also show the Amazon. This is a daily chart on Amazon.com. And this was that big breakout that happened on 325. We had a big breakout, and we've 1, 2, 3, 4, 5 days at today's support level that we're holding the high of that bar. The 10-day moving averages have been rising right along with the 20-day. And basically, we're going to buy the contracts down at 250, and we're going to add in. And we're holding this part as of today. There was your top end right there. And that just so happened to be at 138 and some change. Okay? That's what the daily looks like. In respect to the weekly chart, we're still right up. Today's the last trading day. So, depending on where we close today, we're going to take a look and see if this weekly bar, there's the last time we closed on a weekly high of the bar. This is the high of this bar. And we're about even with it. But the last weekly bar, we're still up toward the high. That's bullish on this weekly chart. Yes, it's narrow range. Yeah, it's a doji. It either breaks up or it can pull back. But it's not really confirmed yet because we have to get to the closing bell. The bullish part remains is that I'm closing at the high of that bar, just as I closed at the high of this bar. And that's why we're buying the calls to hold overnight. Otherwise, we wouldn't be. And generally, when there's going to be the next breakout, is that if you can hold the highs on the weekly, up the higher that you hold up on the weekly, the more stronger the pullback is. And that's why we're cost averaging in on the call, because we know that at least case or worst case scenarios, we make a little bit of money, if not a lot of money, or we can break even. Meaning because of our entries, like I showed on the call chart, are certainly not in the retail range.